Hey everyone, welcome back to Corporate Decoder, the place where we crack open those confusing corporate filings. Today we're diving into a report from Aclarion, and trust me, it's not your typical feel-good story. We're talking about some financial maneuvering that might make your head spin, and the end result involves fewer shares, not more. Let's get into it. Aclarion filed what's called an 8K report with the Securities and Exchange Commission. This is basically a quick update companies give investors about big changes, unlike their regular quarterly or annual reports. In this case, it's all about something called a reverse stock split. Aclarion changed the rules of the game. Specifically, they did something that affects the rights of people who own their stock, so they are required to report that change. They filed papers to do a reverse stock split. On March 26, 2025, Aclarion officially filed the paperwork to make this reverse stock split happen. Think of it like a company deciding to shrink the total number of shares that are out there in the world. It's kind of like everyone trading in a bunch of small bills for one big one. This change took effect on March 27, 2025. That's when the company put their plan into motion and made the change. Here's the tricky part. For every 27 shares of Aclarion stock you owned, they became just one share. So if you had 270 shares before, you suddenly had only 10 after. This is what the 1 for 27 split means. Usually the idea is to make the stock price look better. For example, if one share of stock costs $1, no one will want to buy it. But if one share costs 27, maybe it will entice people. Trading of the new split adjusted shares started on March 28, 2025 on the Nasdaq stock market. Now people buy and sell the new shares. The stock also got a new ID number, a SEC-USIP, that's used to track it. Before the split, there were about 15.722 million Aclarion shares floating around. After the split, that number dropped to about 582,000. So a lot fewer shares exist now. Even though the number of shares that are currently being traded has changed, the total number of shares Aclarion could issue didn't. They could still theoretically issue up to 200 million shares if they wanted to, although they don't. This split doesn't just affect regular shares. It also changes things like warrants, stock options, and restricted stock units. These are basically promises to give someone stock in the future, and the number of shares they can get changes with the split. Way back in September 2025, the company's leaders and investors gave the okay for a reverse stock split. At the time, they didn't know exactly what the ratio would be, but they knew it would be somewhere between 1 for 5 and 1 for 50. Finally, in March 2025, the board decided on the 1 for 27 ratio we've been talking about. You can actually read the official document about this change, the certificate of amendment that they filed with the SEC. This last thing is just a technical detail file that helps computers read and understand the report. Now, what does this all mean? Reverse stock splits are often a sign that a company is struggling. They're trying to boost their stock price to avoid being kicked off exchanges like Nasdaq, which have minimum price requirements. It's not necessarily a death sentence, but it's a move that should make investors pay close attention. Aclarion is trying to make its shares more attractive. By decreasing the number of shares, they are hoping to get the price per share higher and thus more appealing to investors. While this move might temporarily inflate the stock price, it doesn't fundamentally change the company's business. Investors should dig deeper to understand why Aclarion needed to do this in the first place and what their long-term strategy is. Thanks for watching Corporate Decoder. If you found this breakdown helpful, hit that like button, leave a comment, and subscribe for more insights into the world of corporate finance. Stay informed, stay skeptical, and I'll see you in the next video.